All right, good evening. How are we? In this video, or this live stream, I should say, I am going to go through all of your allowances, your tax allowances for this new tax year. The new tax year started today. And before we get into this, I hope that everyone has managed to use as much of their ISO allowance as possible. If you've been paying attention, your ISO allowance was the only thing that was not touched in the budget. Capital gains tax got capital gains tax had a snip, as did dividends. ISO allowances were left alone. We'll get into the other bits and pieces a bit later on, but this is going to be a very quick whistle stop tour of all of your current tax allowances for the new tax year, which started today. And because we are talking about ISAs to start off with, we're going to start with ISAs. So if you paid attention to the video on Monday, your ISA allowance is still, let's get rid of that, it's still £20,000. So with the tax year starting April the 6th today, you're able to add £20,000 into your ISAs all the way up until April the 5th, 2024. Really, really important. As I've already said in the videos and said a number of times, if you do not use your ISA allowance, you will lose it. It does not get carried forward. There are some other allowances that will get carried forward. Well, at least you can bring forward, which we'll talk about in a moment. But this, for me, is one of your most important tax allowances that you have at your disposal, mainly because within your ISA, you are free from capital gains and income tax. Okay, so you pay nothing on that. And look, people get very short-sighted when they talk about this. And the key thing to remember here is that with a £20,000 allowance, if you're to max out the maximum, if you're lucky enough to do that over 10 years, that's £200,000. If you think about it, when you come to retirement, you could start to take income from this and pay no tax. It is an extremely important allowance. Please make sure you're using it. And I would encourage you, look, £20,000 is a lot of money to if you're only able to put in 5 or 10 or 15 or even £1,000, £2,000, make sure you do that, because if you don't use it, you cannot get what you don't use back again. So really, really important. This is a very, very important tax allowance. Next, we're going to go on to pensions allowance. Now, with your pensions allowance, you had a limit of £40,000 that you could pay in to your pension. This would include private pensions, personal pensions, and workplace pensions. Okay. Now, this has been increased to £60,000 per annum. So there's a couple of things here really that are worthwhile just noting. If you are an employee within a business, you have to be earning over £60,000 in order for you to pay in £60,000. And if you're a mega earner, you get tapered. I'm not going to go into that because that's another video altogether. But currently, as it sits, earning around about £90,000, you can pay in above the £40,000, which was your cap before. Now, again, thinking more long term to your retirement planning, the more you can pay into your pension, the better it is going to be for you. I mean, one of the things that Jeremy did in the budget was he actually took off what we call the lifetime allowance, which is basically a cap on how much you can amass into a pension during your lifetime, right? He removed that completely. People thought he was going to take it from just over £1 million to 1.8 million. He got rid of it altogether. And the argument was he was trying to encourage NHS doctors to not retire early because there's a tax charge if you went over the lifetime allowance. Now that that is basically gone, you're going to have a lot of high earners who would have been rubbing their hands knowing that they're on quite handsome sums, maybe not at the point where they're going to get tapered, being able to throw more money into a pension. I think I didn't cover it on the channel because there was a lot of rhetoric around it, and I just wanted to maybe give it time to breathe, because I think the key thing for ordinary people like you and myself to take away is you can pay in more than £40,000. Most people struggle to get to this level. So if you're able to do that, £60,000 is your new annual allowance for your pensions. And that in itself is great news. We're going to move on to capital gains. I did talk about capital gains. So capital gains allowance used to be £12,300. This has now been halved as of today to £6,000. Now, this is important because if you are invested in the stock market, let's say you bought P500 and you had gains, really good gains over a period of time. Now the amount that you can appreciate, have capital gains for, has basically been halved. I mean, this is a tax take. And by the way, capital gains doesn't just if you're invested in property, it also includes any gains that you're going to get from property as well. So this right here was a big shock last year when he announced it. It has come into force today. And the sad thing about this is, right now, when we get into the new tax year, so April the 6th, 2020, so not this one, the next one, it's going to be reduced even further to £3,000. It's a tax grab, but it is what it is. There's nothing that we can do about that. In a previous video, I mentioned, that maybe if you are an investor where you've had quite handsome gains in your investments over the course of the year, you probably would have wanted to sat down with your accountant to see if it was worthwhile, taking any profits to make sure you can utilize this allowance. But it's worthwhile noting you've now got £6,000. For most first-time investors, you may not be too fussed about this, because the reality is, in order for you to be invested and get a capital gain of 6,000, unless you get extremely lucky, crypto comes back. I mean, there will be a lot of people who maybe have a lot of money in crypto who did quite well in crypto. They're going to be stung by this badly, because it means that you're going to enter into tax-paying territory. But if you're just investing little amounts on a monthly basis, you may not have to worry, but it's worthwhile knowing so you can monitor. But like I said, in 2024, it's coming down to £3,000. That leads us on to dividends allowance. A dividend allowance used to be £2,000, and this is dividends from businesses. So if you run a business like I do, I take dividends. The maximum allowance used to be £2,000, and that includes dividends from stocks. That has been cut to £1,000 now as of today. And in 2024, so April the 6th, 2024, is going to be reduced down to £500. Again, a huge tax grab. So there's nothing we can do about this, guys. I mean, just looking at it and writing down those numbers is pretty depressing. It really is. And we've enjoyed, dividends allowance used to be at £5,000. So a few years back, how did we get to this point where it's 10 times, it's going to be 10 times less than that this time next year? It's absolutely mad. So your allowance, unfortunately, has gone from 2,000 to £1,000. Again, worthwhile being aware of. Now, this one right here is an interesting one. This is how much you can earn before you start to pay tax. Now, these are the brackets. I'm going to turn this to red quickly. So you can earn the first £12,570 via work and pay zero tax on that. That is remaining the same. Okay, so that hasn't changed in any way, shape, or form. You start paying tax at 20% if you get into this bracket right here, which is your basic rate bracket, where you're earning between £12,571 and £50,000, 50,270. It's 20% you're going to start paying at a basic rate level. Your next tier up is your higher rate. I'll call this HRT abbreviation, from 50,271 all the way up to 125,140. You're paying 40%. Anything over 125,140 pounds, you start to pay 45%. This is called the additional rate tax bracket. Now, it is interesting to know a couple of things. If you're in this arena, and I have been in this arena before, you start to lose this personal allowance. You start to lose £2 for every pound that you're over £100,000. So at this point, your personal allowance is probably all gone. That's by the by. I think the most important thing for people to realize for the current tax year is that all of these thresholds here, all of these levels have been frozen. And they've been, they should have been increased. They were on track to be increased. So, for example, they would say you could earn maybe £15,000 before you start paying tax. That was what was mooted to happen. But they've been frozen. And they're going to be frozen, I think, for the next 2-3 years. Now, there has been a lot of consternation about this, because what that basically means is if you go for a pay rise, and let's just say you start to earn, you were in this bracket here, and you were on the cusp of, let's just say you were earning 50K, right? So you're within the cusp of this limit right here, paying 20%. If you get a 10% pay rise going up to £55,000, right? Had this not been frozen, you could argue, or if it had been increased, you could argue that you wouldn't be pushed into a new tax bracket. Because this has been frozen, it's going to push quite a lot of people. I think the number from the Office of National Statistics was 1.3 million people are going to pay more tax by the fact that he's actually frozen these tax brackets right here. It may or may not impact you, but if you are vying or on track for an increase, a salary increase, then it is something that is worthwhile just being aware of, really, to be honest. Is going to push a lot of people into the next tax bracket. The next one to probably talk about here is your personal savings allowance. And this is interest, right? So you've got money in the bank, how much you can earn in interest, which will be completely tax-free. Now, if you this goes by your tax banding. So if you're basic rate taxpayer and you're at the 20% level, well, you can earn in interest £1,000 before you start to pay tax. If you're at the higher rate at 40%, it's £500 that you can earn before you pay tax on the interest that you earn in your bank accounts. And unfortunately, if you're at that additional rate earning over £125,000, you get zero, zilch, nothing at all. I know that we've covered a lot here, but it is worthwhile just knowing what these allowances are. But if I can just go back for 1 second, and I'm just going to repeat myself, this right here is king. And many people will disagree with me in the comments, but I come at this from a financial planning point of view. I used to be a financial advisor. When you think about tax efficiency and tax efficiency first, you're always looking at ISAs as a as a key component to your tax efficient planning. Now, yes, you do have pensions on top of that as well, which can be tax efficient because you get money, you get tax on your contributions in. So if you pay £1,000 into your pension, the government is actually going to give you some additional money, right? So actually this £1,000 ends up costing you less. There are benefits to pensions. So pensions are also within that tax pyramid, right? That tax efficient pyramid. You then have other investment vehicles which you can go into, VCTs, EISs, and so on and so forth. But for normal people, and I'm saying ordinary people, maybe first-time investors just starting out, you should absolutely be starting here without question. Without question. And forget the personal savings allowance, in my opinion. You want to be putting as much money into this as you possibly can. You start saving with your ISA first. Because even if, in 3 years or 2 years' time, the ISA allowance gets cut down, if you've maxed it out, it's not going to affect you retrospectively. And this is really, really important, guys. I've maxed out my ISA for the last tax year. I'm going to do exactly the same for the new tax year as well. So that's how I'm going to end this live. I hope you found this useful this bank holiday weekend, and I hope you have an amazing time as well. Whatever it is that you plan to do, just as a very brief ask, let me just get a few things up here, and a thank you to everyone who's actually bought the book. It's now actually a bestseller, and to be able to say that is a little weird, but I appreciate everyone who's actually bought the book. If you haven't picked up the book, if you're finding the channel for the first time, this is what I do. I'm a qualified financial advisor. I do a little bit of TV work now. I've just written a book, which is a bestseller. My goal here is to have conversations with people that I wish that someone had with me when I was in my 20s. And through 15 years in financial services, I like to think that I'm in a good position where I can impart some of the knowledge and some of the things that I've learned. And this is what the channel is all about. You can do me 2 favors before I leave. Please smash the like button if you've got value from this. And if you do want to hear more from me and the channel and learn a little bit more, feel free to subscribe if you haven't already. Enjoy your bank holiday weekend. I will catch you soon.